This is Big Country Lifestyles with Robbie Johnson of Keller Williams Realty. This show is about you, your lifestyle, your home, and our community. This is the show where we explore our area to help you find the perfect home. It's also a place where we help you sell your home. Whatever your preferred lifestyle is, Johnson Property Group wants to help you find the perfect property. Thank you for tuning in to Big Country Lifestyles. Well, good morning, Big Country. It is Easter weekend, so happy Easter to all of you. Thank you so much for joining our show today as you celebrate Easter. On our show today is Lisa Boyce with Citibank Mortgage, and she is going to share mortgage myths with you. But first, as always, we need to share our needs with you that maybe you can fulfill. I spent the week in Destin last week with my team there, so Alex and Joe were here with our customers, and I'm going to let Joe talk to you a little bit about what he's looking for and what he has listed.
Hello, everyone. This is Joe Potosnik with the Johnson Property Group at Keller Williams Realty, Abilene. I'd like to take a moment to brag a little bit about the results that we have had with selling homes listed with us in the last 2 months or so. We have an average list price of $182,000 with an average time on the market to contract of just 19 days. This is an amazing result, and I know that is due to the marketing efforts of our team.
So in listening to all of this, we obviously need more listings to sell in 19 days or under, which kind of reminds me of, we do have that 30-day guarantee to get our customers' homes sold pretty quickly, or we reduce our commission. So apparently, we're not having to reduce our commission, and we have some really happy sellers, so that's great. I do have a listing appointment tomorrow night, which I'm really excited about. It's going to be a great new listing coming, and we've got another one hitting the market on Monday on River Oak Circle. I'm really, really excited about that one. So, okay, Joe, anything else that you have to tell us real quick about your buyers or your sellers?
Yes, I've got this great listing at 534 Prosperity Road. It's a 4-bedroom home with 3 full bathrooms, a 3-car garage, and it's located in the estates at Pack Saddle Creek. It's in the Wiley Independent School District, and it sits on 1 acre with many extras, including a water softener, reverse osmosis unit, sprinkler system, and landscaping, and it's priced at just $389,900.
And I'm going to just say this because I'm the one who got to photograph this house. I call it spa-like features. As you know, that's what I put in MLS, are just found throughout this home. The custom upgrades in this home are just incredible. I love the tile work, the woodwork. It's absolutely a beautiful home. So if you want to take a look at a large home, a beautiful home, give us a call at 325-428-9114. Anything else, Joe, that you've got going on?
Nope, that's it. I'm going to pass it over to Alex.
Thanks. I'm looking for a home that's small for investors. We have 2 investors right now. And then also we have quite a few buyers that are looking for $500K and above with pool, land, and at least a workshop as well. What are you looking for, Robbie? Well,
I have a few that are the same, that are some that are in the $250,000 range that want, an acre or 2. But I have a doctor who's relocating here. She's looking for over $500,000. I've waited on another couple who are looking for over $500,000. So that customer is actually in our market right now, which is really healthy for the Abilene area. But I just have to plug real quick the barn dominium that I have on the market. I don't know how else to say that one man's loss is another man's gain in this one. How much more home that you can get, 5,000 square feet of home, 1,000 square feet of an apartment, and an 1,800 square foot workshop with 3 lifts, one that's electric, with 17 solar panels, an outdoor kitchen, a saltwater pool, and 9 acres, for $699,000. I'm thinking if you can find a better deal or a better home, I suggest you buy it because there is not going to be a better deal than this one in Abilene with this barn dominium. So if you want to see it, please give me a call because it has been showing nonstop in the last 2 weeks since we did this dramatic price drop on it. So if you want to see it, 325-428-9114. Also, you can look us up online on our Facebook page, which is Johnson Property Group. We're easy to find. And also our Big Country Lifestyles radio show. You can also find a Facebook page for that as well.
Feel free to ask us any questions that you guys have. We'll check it regularly and answer any that you have.
We'll answer them either online right then, or we'll bring them on our radio show as well.
Yeah.
Okay, stay with us, because up next is Lisa Boyce with Citibank Mortgage, and we are going to be talking about mortgage myths.
Transferring to Dyess Air Force Base, or maybe Hurlburt Field or Eglin Air Force Base in Florida? If so, the real estate team to help you find the perfect home is Johnson Property Group Network. With team members in Abilene, Dallas, Birmingham, Alabama, Destin, Florida, and Fort Walton Beach, Florida, we are the perfect match to serve your relocation needs. Our team members are military relocation certified, and more importantly, boots on the ground experience with a combination of 73 years of selling real estate. If you want an agent with a complete understanding of the military moving, then call Johnson Property Group Network at Keller Williams Realty today at 325-428-9114.
Thank you for staying with us. There was an article recently in the Motley Fool that discussed mortgage myths that will cost you if you aren't careful. A little bit of the article went as this: buying a home is probably the single most expensive purchase a person will make during his or her lifetime. Homeownership is often viewed as a sign of success in America, and according to recently released third-quarter data from the Census Bureau, the homeownership rate in the United States stood at 63.5%. This figure represents the fulfillment of many American dreams. However, the American dream of homeownership can easily become a nightmare if you happen to fall victim to one of the numerous pervasive mortgage myths. Not understanding the various facets of your mortgage options or the buying process could wind up costing you dearly if you aren't careful. So, here to talk to us today is my dear friend, Lisa Boyce of Citibank Mortgage. Hello, Lisa.
Hey there, Robbie.
I've worked with Lisa for 3 years, and truthfully, she closes probably about 50% of my clients. She's consistent, reliable, she has great terms, and her length of time in the industry deems her, in my opinion, as an expert. I'm honored to hand her name when a client needs a referral, and I think all three of us really feel the same way about Lisa. So today she's going to talk to us about mortgage myths. So do any of you have any questions for Lisa?
Pre-qualification.
That's a perfect one.
Start off with that.
Let's start off with pre-qualification. Lisa, tell us a little bit about pre-qualification and what it means.
Okay, that's a great one to start with. But first, I want to say thank you to the Johnson Property Group for allowing me to be here. I do want to disclaim that we are Citibank Mortgage, and that's City with a Y, and we are an equal housing lender. So let's talk about pre-qualification. What is the difference between pre-qualification and being pre-approved? A lot of lenders that pre-qualify somebody would only pull a single merged credit report, which means a credit report from one bureau. That saves them time and money. Citibank pulls the tri-merged credit report, which is 3 credit bureaus. All 3 determine what's out there on a person's credit. So we also determine income by requesting the pay statement or bank statements, depending on if you're a person.
Okay, I have a question, Lisa. So when you're pulling their credit, are you pulling their credit in a pre-qualification stage, or are you pulling their credit in the pre-approval stage?
We are pulling their tri-merged credit report as a pre-qualification, but that credit report is also good throughout the process and good for 120 days.
So what is, this is my thought, which is apparently I am not a lender. Let me disclose that. I'm just a realtor. This is my lateral partner.
Not just a realtor.
Yeah. So the lender does their job and we do our job, and so that may be why sometimes we don't know all of their terms. But I thought pre-qualification meant you're having a conversation with these particular buyers, and you're not necessarily totally pulling their credit, which would be done in pre-approval. So what's the difference of those two?
Okay. Pre-approval could be a stage to where somebody's just wanting to know, hey, what do I qualify for if I were to purchase a home? This is where I work. This is my income. This is my bills. Okay. So if somebody's very serious about getting out and looking at a property, most realtors in Abilene want a pre-approval for their borrower.
That's exactly what I was saying.
So we take it one step further. We pull that tri-merged credit report, get the income documentation. You're dealing with experienced loan officers with Citibank, so we make sure before we put them in the car with you that they are going to be able to get a mortgage.
So basically, you've got pre-qualification, which is your beginning conversation with them. Then you're going into the pre-approval. But just because they have a pre-approval does not mean that they get to close on that loan. Is that correct?
That is correct. The approval process is the full documentation of every piece of financial information, such as your pay stubs, bank statements, tax returns, anything that the lender's going to need.
And then it moves into the underwriting process, which in that process, it isn't just the person getting approved, it's also the property getting approved with the underwriter. Am I correct in that?
That's correct. And if we do have a borderline client that we, can't really determine based on the documentation they've given us, it's not like we have to go to a physical underwriter any longer. We have these automated services such as, which you'll hear Fannie Mae and Freddie Mac services that we can run a scenario through for credit and qualifying. And then you're right, once we have an actual contract and the appraisal's ordered, the property also has to meet those standards as well.
Okay, so now if you want to get pre-qualified, pre-approved, and let us find you a property, I suggest that you start with Lisa, and her phone number is
325-698-9597.
And Lisa, so I'm wondering, there's another myth out there. Do you need to have perfect credit to be able to buy a home?
Actually, satisfactory credit. You don't always have to be perfect. Very few of us are perfect on paper. Honestly, somebody's going to miss a payment here or there. As long as it's not a habitual problem with credit, as long as their credit scores. We have some investors that will take down to a 600 credit score on our FHA loans.
Okay.
There's other criteria, but just generally speaking, 620 and above, and good pay history on things, and we can sure make it happen.
So we got credit taken care of, pre-approval. There's another myth out there that I hear all the time out in the field. Do I need to have 20% down to buy a home?
You do not need 20% down, Alex. There's so many great products. Obviously, if you're a veteran, thank you so much for your service. You can do a 0% down payment. The federal government has what's called the FHA loan, which is a 3.5% down payment. Conventional, we even have several Home Possible and Home Ready products that you can do a 3%. A lot of those have certain criteria. Typically, it's 5% down on conventional, but there are other options out there for less down payment.
Okay, so on the lower conventional down payment, the 3 or 5% conventional down payment, is that only for primary residence?
Yes, ma'am. Only primary residence or second homes. On a second home, you can do a 5% down. Your second home has to be at least
50 miles away.
Yes, ma'am. Or in a resort area like Destin, Florida.
Yeah. You're reading my mind. Okay, I want to go back to the perfect credit real quick. So if you have somebody who has a 615, do you give them suggestions of what they need to do to get their credit to 620, or they just need to wait until they get it to 620? Are they going to give that 5-point leniency, or is it 620?
At a 615 credit score, if we could put them in the FHA loan, like I said, there's a few overlays, sometimes a couple months requirement of PITI, principal and interest, taxes and insurance payment. They like to see you have a little bit of reserves when your credit's not spotless. Then we also usually, between that 600 and 620 credit score, they have to take a home buyers counseling session, which is an online course, which just is good for all of us to take. It just kind of tells you what to expect and how to manage a mortgage.
Lisa, I hear that there's another myth out there. Your mortgage payment cannot exceed 28% of your income. What does that mean?
Before we move into the ratio portion and the percentage of your income that we need to count, let's go back to the 20% down payment myth, okay?
Okay.
it is a good product if you have the 20% to put down, because on a conventional loan, that does away with the mortgage insurance. Every type of loan, I like to say, has their piece of the pie. When you go conventional, if you do not put 20% down, then you have to pay what's called PMI insurance. That's private mortgage insurance. It only protects the lender, and it's just because you don't have a large investment.
Do we have to do that for every loan, PMI?
No, sir. PMI, private mortgage insurance, is on conventional.
Okay.
On your VA loan, you have what's called the VA funding fee, the next piece of the pie for that type of loan. But if we have a veteran with as little as 10% disability when they've been discharged from the military, they don't pay that funding fee.
Okay.
So that's 2.15% that they're saving.
Wow.
Or if they have consecutive use of their VA, it's 3.3%. So that is huge. So thank you, veterans. And anytime there's that disability, 10% or more, they do not have that VA funding fee ever again. Now, on your FHA loan, FHA is a great product. A lot of people with the minimum down of 3.5%, gift funds, it's assumable type loan. But FHA really has the hardest hit on the mortgage insurance. They have the upfront MIP, that's 1.75% of your loan, and then there's a monthly factor also of 0.85. And on the FHA loan, it stays for the life of the loan. So that's huge. Anytime we've got a good borrower with decent credit, 5% down, then we're going to try to push them over to that conventional loan, because unlike years previously, that PMI insurance is based now on credit as well. So a lot of times it's a fraction of what you'd pay on MIP mortgage insurance premium. So we're always looking at that. Betty Garner in my office, the other loan officer, and I, we're always trying to make sure that your borrower's in the perfect product for them and they're getting the best deal that they can get.
And Lisa, I'm wondering, we also have DTI, debt to income ratio. What does that mean?
Okay, typically speaking, we're going to look at a payment ratio, which is a percentage of the borrower's income that could go towards the house payment. And then the debt to income ratio is the total debt, which is the house payment plus any car payments, student loans, credit card payments. Okay, so if we have a borrower that doesn't have a lot of debt, then their payment ratio could exceed that 28%. We could spend upwards of 32% for their housing because they don't have a lot of debt.
Okay, that's a great, makes me think of this question. Deferred. Do y'all take those in consideration for my generation that has a lot of student loan debt? How is that going to factor into me buying a home?
That's a great question, Alex, because up until about a year ago, if a borrower could prove that those student loans were deferred for at least 1 year, then we did not have to count those payments. But that came back to bite a lot of borrowers, and there were some default problems, so all those guidelines have changed.
Okay.
So along those lines with the student loans, the new guideline is unless it's a fully amortized loan, which may be 15 or 30-year payment, then it's a 1% of their balance is what we have to count as a lender in your qualifying ratio. Okay?
Oh, that's not too bad.
Not too bad. So let's kind of talk about ratios. Everything's based on good credit, amount of down payment. All these automated underwriting systems that we have really can be more lenient. So if we've got a higher payment ratio or a higher debt ratio, but we have a lot of assets and really great credit, a lot of times some of those loans are still going to get approved.
Oh, nice.
On your FHA loan, then one more advantage on that FHA scenario is a lot of times those ratios can be higher as well. On your VA loan, let's say we have a veteran without any debt and they found the house of their dreams, we can spend all the way up to their 40%, which sometimes seems crazy, for their payment if they don't have other debt. So, again, we're going to evaluate the situation. We're going to counsel those borrowers. We're going to look at these debt to income ratios. If the ratio is a little too high, we're going to pick out one of the debts maybe and get the biggest bang for our buck, maybe a large payment but small balance, and maybe they could pay that off. I mean, we're not just going to say you can't get it because your ratio is too high. We're going to help counsel them and talk them through it and see what they're thinking as well.
There's a lot of options.
There are a lot of options.
Just hearing that speak as a young person, it sounds like there is many opportunities that I have to get a home.
Okay, so another myth, and I'm just kind of looking at this next myth, and it reminds me of Dave Ramsey. And for those of you who don't know who Dave Ramsey is, for me, he was a lifesaver. When I got a divorce about 7 years ago, I went through Financial Peace University, and it was life-changing for me in the way that I would spend my money and take care of my affairs and my children, and pretty much getting through the single life as a single mom. And one of the things that he really harps on, if you want to call it, is the amount of years that you pay on your mortgage to get your mortgage paid off as soon as possible. So one of the myths is that a 30-year mortgage is always going to be your best option. So tell me a little bit about that, Lisa.
Well, Dave Ramsey is a great program, Robbie, and congratulations. I mean, it is just a great program to follow. If we could follow it, then he would say we don't need a mortgage at all, which wouldn't that be fabulous? But, I would be.
No, maybe not.
But 30-year mortgages, I mean, it's a good product. It just kind of depends on where you are in life. But what I like to do for my clients is do calculations for them that if they can afford a 15-year mortgage, let's look at a 20-year mortgage. Mm-hmm. Or if we need that 30-year mortgage and that's the payment we want, then let's take $50 a month or $100 a month, or let's put additional towards our principal and get rid of that interest. I'm a big fan of paying that mortgage off just as anybody else is, and there's no prepayment penalty on any of these loans that Citibank offers, and just a little bit a month, $100 an extra month can save you $30,000 in interest.
I'm so glad that you brought up about the prepayment penalty. So please listen to that in using Lisa with Citibank Mortgage, because I had a listing a couple of years ago. We got to the closing table, and he literally did not know until the day before the closing that he owed $12,000, and it was from prepayment penalties. And so thank you for bringing that up.
And some of those adjustable rate mortgages, which is our next topic, do have a prepayment penalty and can get your borrower in trouble. So
that's another myth that I hear a lot, Lisa, is that adjustable rate mortgages, you should never get one.
I've been in the business about 30 years, and I think I can count on two hands the number of adjustable rate mortgages I've done. I've got one going right now, so it's odd that we're talking about this, but it's a 5-year ARM. The borrower is only planning on being here. Of course, plans do change. I realize that, for 5 years. Okay, the interest is not a great amount of difference, but it was about 1.5% lower than the 30-year fixed mortgage. So he is very financially sound. I feel comfortable in putting him in that product, and he just feels like he'll be able to manage that. And in the 5-year period, he'll either be selling that house, which you guys can hopefully list,
yes,
and then, or he'll be moving on. So, it just depends on where you're at in life. Previously, we had a really nice VA, I think, Joe, that you had mentioned, VA right. Adjustable rate mortgage, and we know how a lot of our veterans come and go quickly, and that was a good product for them. But, I mean, it can backfire on you very quickly, so we need to be very careful. Make sure you're speaking with a professional loan officer that's going to be giving you the advice you need on this.
So that VA adjustable rate program is gone now?
We do not offer those.
I see.
Congress didn't renew that bill on those VAs, so the adjustable rates, but we're always looking to see if it's going to come back.
Lisa, it's interesting that we're talking about VA loans, because the VA loan has no down payment, but at the same time, they have closing costs. Closing costs, I hear, is a myth that can be rolled onto the loan. Is that true?
Actually, I have veterans call me every day talking about that zero move-in. Well, I didn't think I had to pay any closing costs. That's a zero move-in, which that's a great myth. Obviously, there's costs involved on any type of mortgage we're going to do. We've got to make sure that the collateral's there, so we got to have an appraisal. Mm-hmm. We've got to make sure the house is on the lot that we're doing the loan on, so that's the survey. There's just all kinds of costs involved, unfortunately, mainly third-party costs that go elsewhere, but, just to make sure that what we're selling our borrower and the loan we're doing the loan on is protected. So what I always tell my customers when I'm pre-qualifying them is we've got 3 pieces to that puzzle unless you're a veteran. You have your down payment, you have your closing costs, and then we have those prepaid items, which is that taxes and insurance collected up front. We have to pay the 1-year insurance directly at closing to your insurance company, and then the escrows are set up. Now, I like to tell the borrower that the agent is the person that is going to negotiate that contract for them. feel free to talk to the agent to see if in that scenario those closing costs can be added to the sales price and the seller pay those on their behalf. But typically a seller cannot come down in price and pay closing. So you got to pick what you want to do. And you guys
say
are
that all the time. It's price or terms. I have that conversation with so many, and I think it's because there's buyers, they at times don't understand that, okay, for instance, you have a $150,000 home. They need $5,000 in closing cost. And so to them, it's like, well, they're getting $150,000 because the contract says $150,000. No, the seller is not getting $150,000. They're getting $145,000 because in paragraph 12, you asked for
exactly
$5,000 for the seller to pay. And another thing that we can get creatively, can do is if they need the $5,000, we could actually say, okay, Mr. Seller, if you need $150,000, we'll write the offer for $155,000, and then you pay the $5,000 in closing costs. But our next obstacle becomes
the appraisal.
Thank you.
And Robbie, you are saying great things as an agent because you know exactly what you're talking about. And that comes into another myth that we see is that for sale by owners are the best choice over using a real estate agent. Can you please explain to us how that is not true?
Oh, my goodness. Let me just say this. If you have a property and you're going to sell it, would you sell it for less just because somebody's not using a real estate agent? No. So they're still going to want the same amount of money. What you're going to have a problem with on the buyer's side, and I have the exact scenario on my desk today. I received a contract. It's a for sale by owner. And the buyer's paying everything, including title policy.
Oh, my gosh.
Yes, if they would have had a knowledgeable agent, then that contract more than likely would have been negotiated completely different. I rarely get a contract that an agent's negotiated where the seller is not at least paying title policy and survey.
Okay, thank you, Lisa. As we wrap up today, if you can please tell us and our listeners, what's the benefit of using a local lender?
Well, obviously, I want you to use a local lender, but if you don't pick Citibank, there's plenty of other local lenders that are really good in Abilene. We're in a unique situation. Most of our local lenders have excellent relationships with all the third-party servicers, with our agents. The most important thing about that is in Abilene and nationwide, we have a shortage of appraisers. So if an appraiser gets an assignment from an out-of-town lender, they're not going to put that one top priority in to get that done, which could be a delay in closing. Also, with a lot of the onlines, you're not necessarily going to get your rate and fee worksheets until contracts are already in, and then sometimes it's too late. You've already kind of gotten into the pre-qual stage, and, then fees might be higher than what you can get from the local lender. Lastly, I'd like to say you're going to run into those local lenders at church, grocery store here in Abilene, and if things don't go smoothly, then obviously that's not going to be a good thing for them. So we're here to please and to try to make everything go as smooth and quickly as possible.
And listeners, what is incredible too is that for Lisa, you can call her cell phone number. Compared to...
I love that because I do it all the time. Yeah. Actually, I text her about 10 at night. Yeah.
I'll see these online or other what have you out-of-state places, and you're just calling a 1-800 number in office, and you hope that person cares about you to take care of you.
Or one that actually I'm trying to push to use, Lisa, right now. They told me, I was asking them some questions about their loan, and they said, well, we don't know any of those answers because we're not even assigned a mortgage lender until after we're at contract. Okay.
Right. And I'm headed back to take care of that customer. So yes. Absolutely.
And clean up that mess of not even getting the project started, because listeners, think about that. If we have a 30-day contract and we need to close in 30 days and you have an out-of-town lender, well, on our side, we're going to get inspections going. But for the appraisal, if you don't even have a lender yet, we're talking now a 45-day contract.
Exactly, Alex. What we like to do is once we get those contracts, we look at those closing dates, get everything going, and stay in close contact with our agents. So call Citibank Mortgage 325-698-9597 and let us get that deal done in 30 days or less.
So as we wrap up today, this show's about our community and events in our community too. And I know that my husband and my sons and most of my family, they are just really big shooters. So there's a big clay shooting event coming up. Alex, tell us a little bit about that. I know you'll be
we are
shooting
going to have so much fun. I love shooting clays. We are going to go to the Boy Scouts Sporting Clay Classic. It's going to be the next following Saturday. If you guys want more information on that, please give us a call at 325-428-9114. Also, please check us out on Facebook. If you have any questions today about the show or the topics that we discussed today, we'd be more than happy to answer your questions and help you out.
So everyone, thank you so much for joining us on Big Country Lifestyles radio show, brought to you by Johnson Property Group of Keller Williams Realty. And please join us next week, same time, same place, and we'll have some more exciting topics for you. If you want to go to our Facebook page and let us know some things you want us to talk about, go to our Facebook pages, Johnson Property Group or Big Country Lifestyles radio show. We look forward to hearing from you and see you next week.